Tonight, all eyes are on NVIDIA. The company reports earnings after the market closes, and this single announcement could determine the direction of the entire AI stock rally. Investors are asking the big question: can NVIDIA continue to power Wall Street's excitement about artificial intelligence? Or are we about to see the first signs of fatigue in one of the hottest trades of the decade? In this video, we'll break down analyst expectations, explore the bullish and bearish cases, and discuss what these results could mean for investors in the United States, the UK, Canada, and Australia. To understand why this earnings report is such a big deal, let's step back for a second. NVIDIA isn't just a chip company, it has become the backbone of the AI revolution. Its graphics processing units, GPUs, are what make modern artificial intelligence possible. Every time you hear about ChatGPT, autonomous driving, or data-intensive machine learning, chances are NVIDIA hardware is behind it. And because of that, NVIDIA has turned into the stock market's poster child for artificial intelligence. Over the past few years, its share price has skyrocketed, pulling up the NASDAQ and even influencing the S&P 500. When NVIDIA rallies, ETFs that hold it rally. When NVIDIA stumbles, global markets feel the pressure. That's why tonight's report is being watched not just in New York, but in London, Toronto, and Sydney as well. So, what is Wall Street expecting? Analysts have set the bar high. For this quarter, consensus estimates point to revenue of roughly $28 billion, a massive number compared to just a few years ago. Earnings per share are projected at around $2.95. But here's the key. While the headline numbers matter, the most important line item is NVIDIA's data center revenue. That's where the AI boom is showing up. Demand from cloud providers like Microsoft Azure, Amazon Web Services, and Google Cloud has been driving explosive growth. If data center revenue once again comes in above expectations, the market may reward the stock with another leg higher. But if it shows any signs of slowing, investors could take that as a warning sign. Let's talk about the bullish case first. Supporters of NVIDIA argue that demand is nowhere near peaking. Artificial intelligence adoption is still in its early innings. Every major tech company is racing to build bigger data centers, train larger AI models, and roll out AI-powered products. And all of that requires NVIDIA's GPUs. On top of that, NVIDIA still commands roughly 80% market share in high-performance AI chips. Competitors exist, but none have matched NVIDIA's software ecosystem and developer tools, which have become a standard in the AI world. Add in a strong balance sheet and the potential for continued revenue surprises, and bulls believe NVIDIA could keep beating expectations for several more quarters. Some analysts even argue that tonight's earnings could spark the next leg of the AI trade. Now let's look at the bear case, because not everyone is convinced. Skeptics point out that NVIDIA's stock price already reflects near-perfect conditions. The valuation is enormous, with the company trading at multiples that assume hypergrowth continues. That leaves very little room for disappointment. Competition is also heating up. AMD is making big pushes into the AI chip market. Google, Amazon, and Apple are developing their own in-house processors to reduce dependence on NVIDIA. Even if these alternatives are not dominant today, over the long run, they could chip away at NVIDIA's market share. Finally, there's the issue of supply and demand. While demand is sky high right now, investors worry about whether it's sustainable. If tech companies pull back on AI spending, even slightly, NVIDIA's growth could cool off faster than Wall Street expects. So what does this mean for the broader market? NVIDIA earnings are not just about one company anymore. The results have ripple effects across sectors and countries. If NVIDIA beats expectations, we could see a broad rally in technology stocks. ETFs like the QQQ and SMH could surge. AI-related names such as AMD, Microsoft, and even Tesla could ride the wave higher. Confidence in the AI story would be reinforced, and momentum traders might pile in again. On the flip side, if NVIDIA disappoints, the reaction could be brutal. Tech stocks across the board could sell off. Growth-heavy indexes like the NASDAQ could retreat. And because NVIDIA is widely held in funds across the US, UK, Canada, and Australia, international investors would feel the pain as well. In short, Tonight's report could influence not just Wall Street, but portfolios worldwide. So here's the bottom line. NVIDIA's earnings report tonight is one of the most important events of the year for AI investors. The company has been the undisputed leader of the AI rally, but with expectations sky high, even a small miss could send shockwaves through the market. If the bull case plays out, NVIDIA could prove once again that AI demand is stronger than anyone imagined. If the bear case shows up, we might see the first cracks in Wall Street's AI obsession. What do you think? Will NVIDIA smash expectations again, or is the hype finally cooling down? Drop your thoughts in the comments, hit that like button if you found this breakdown useful, and make sure to subscribe so you don't miss my reaction video once the results are released.